Pleased to be joined on Trading Nation by Bob Dahl, Chief Equity Strategist at Nuveen Investments. Bob, really by any measure, historical length of time, days out, up, whatever you want to do, it's almost an unprecedented stock market. I'm sure you would agree. The question is this: with a rate hike today and 2, 3, or even 4 more expected next year, will the Federal Reserve kill the equity market rally?
I don't think so. 4 may be the borderline, Brian. Look, the Fed will respond to a bunch of things, inflation being one of them. To me, that's the biggest kind of fundamental risk for 2018. If inflation starts showing its ugly head, then we got problems. But absent that, we still have most of the tailwinds in place that we've enjoyed in 2017, in which case it would be onward and upward. Probably not at the pace and not a straight line like we saw in 17. We might actually have a down month sometime next year.
No, wouldn't that be a shock? This could be, I think I read, if we don't finish down in December, it'd be something like, and don't quote me, like the first year without one down month, including dividends. We had one that in dividends we were up in like 50 years or so. And it's truly incredible. The point is this.
It's 100 years. Is it 100? It's since the S&P 500 was created in 1926. This has never happened before.
So literally books will be written perhaps about this market rally in this year. So let's try to let's try to write this book now. The next few chapters, the epilogue, if you will. I assume it must end at some point. I maybe not. When would that be? I mean, when do we get honestly, a year where the Dow goes up 3% or down 4%, and nobody's concerned about it because it's normal and it's healthy?
Exactly right. Look, I come back to if earnings are okay, that's what moves stocks, and they're looking okay, even without the tax bill. The tax bill, of course, is a tailwind for that. Look, markets hate inflation. That's when the Fed has to come and be punitive. And so far, inflation's missing. To the extent it stays missing, the bull market probably continues. But at some point, somebody's going to have to hire a worker they can't find and pay up for it, and we start a little wage inflation. I don't think it's today or tomorrow, but it's not forever on this bull market.
No, because we're getting near unemployment levels that some would say would suggest nearly, quote, full employment, at least in certain areas. You know, we've got 6 million open jobs, so wage inflation is probably going to be out there. If we start to see inflation, now maybe we won't ever again, but if we do we sell stocks and buy things like Treasury inflation-protected securities, like TIPS? Do we buy gold? Do we buy Bitcoin? Do we hide under the mattress? What do we do?
Well, with Bitcoin, why do you need stocks and bonds? You're absolutely right. But in the meantime, look, when inflation begins to move up, it's not an immediate downturn in stocks. A little bit of inflation is good for the revenue line. It's when it becomes evident the Fed has to sit on it by becoming punitive and raising rates faster than the curve suggests. That's when we worry. That's when we tend to get the inverted yield curve. You know, they're in our future, but they're not evident anytime real soon, Brian.
Serious question around Bitcoin, and not just Bitcoin, Ethereum, Litecoin, XRP, some of the other ones. It may be a bubble, it may not. I have no idea. I don't profess to know. I'm not going to guess. However, if it does turn down, is it in any way systemic, or is it simply its own asset class, which we will watch, right? Like a guy juggling chainsaws, you can't turn away. You hope it ends well. It could turn out badly. Will it affect anything else, or is it just its own thing? It's not housing, right? It's not the internet stocks.
Yeah, the longer it goes and the bigger it gets, the more the answer to your question is yes, it has a spillover effect. It's sort of been, until recently, pretty isolated. Now you can't have a conversation without Bitcoin showing up. So somebody will get scared if Bitcoin drops by 30% in a short period of time. Then it has some spillover. I think the big rise points to some speculation, ease in liquidity, and these are things that if they dry up, financial assets become a little bit more in trouble. So I think we have to watch it carefully, given how front and center it is, Brian.
Because if it does fall, and it may not, but if it does crash, then it might just cause a nervous effect because people watch it and they start to worry. They start to remember things can go down. Is that the idea?
That's exactly right. That's exactly the idea, even though the fundamental overflow is pretty non-existent.
Yeah, the chainsaw juggler. And listen, and hopefully it'll end well.
Yes.
He'll put the chainsaws down. applaud, and walk off. We'll see. Bob Dahl, Nuveen Investments. Always a pleasure, Bob, to get your views. Thank you very much.
Thanks, Brian.
And folks, thank you as always for watching Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.